Okay, guys, uh, just making sure we're all up and running. Seems to be coming through good. Just let me know if you can hear me clear, and then we'll rip into it. So, I hope we're all doing well. Who we got in today? Just gonna make sure I'm still organised. G'day, Ben. How are you, mate? Guessing I'm coming through okay. Fantastic. All right, let's get into it. So, welcome, guys. Welcome to Trade Setup in the live stream. It's the 16th of August, so we're creeping on in there. Hope we had a good weekend and we're all safe and sound with all these lockdowns and everything. I'm talking mentally safe and sound more than anything else, but yeah, it's been a rough time, but we'll get through it. Now, markets today tipped over from the open and sort of just hovering around the lows. I think I haven't looked at it for a few minutes. Just been playing around on the Hang Seng, which we'll talk about more in just a moment. Uh, for anyone that's new, welcome. Remember the general advice one. You'll see that on the screen there. We only give general advice only. Don't take into account anyone's positions or anything like that. So it's just our opinions and my view, or my opinion and my view only. Feel free to join us at Twitter. At the top left-hand corner, you'll see the handle for, I think you call it a handle, for Twitter at trade_setup. You can join us on Facebook too if you like, but more importantly, subscribe to us on YouTube, in the bottom right-hand corner. It was at TradeSetup, capital AU. Search that and you should find a whole lot of material on the site there. Now, today I'm just going to get into, rather than talk markets, I mean, quite honestly, the market's not doing too much. They're just bouncing up, and it's really bullish. And the markets has looked time and time again for reasons to sell off, and it just keeps creeping high. You got the US. I think the S&P is about 4 days in a row to made new all-time highs. Look, it's only creeping into new all-time highs, but the pressure is definitely up. Earnings are coming out okay, or coming out good in the US, which is obviously supporting everything over there, and in turn that's supporting us. We've traded into new all-time highs a few times last week. Back off, we're down 35 points today. Probably a bit of unwinding, a bit of profit taking, a bit of nervousness, maybe. We're inherently a very nervous market compared to around the world. So especially the US and Europe's not too bad. The DAX is in new all-time highs as well, whereas the FTSE is slowly catching up. They're the two sort of key ones I look at. G'day, Pete. Um, so yeah, it's ticking away nicely. Realistically, people have tried, like I said, tried time and time again to go short, been squeezed out of the action. So anyone, if you're going to go short, if you're wanting to go short, you really got to wait for confirmation. You've got to see some lows taken out, and don't be scared that the market it's gone and you're going to miss out. That fear of missing out. Remember last time when it sold off quite hard, it was sort of creeping up, kept flicking lower, bouncing back up, flicking lower, and then one day it just went bang, went through for a few days, and then you got your lower high to work off. So if it's going to go, if we are going to get that almighty sell-off we're all expecting, or sort of hoping for, just to liven things up a bit, especially with the index trading, there's going to be enough fat in it where you don't have to try and pick the top. I mean, if you're trying to pick the top, you're going to get killed. And that's the same if that's your trading style, picking tops and bottoms, you're going to get killed, I think, more often than not. Yeah, you can get it right. You can average in and all that sort of stuff. But I'm an all-in kind of guy off confirmation and then edging out rather than edging in and then all out type of thing or taking some off. But I think it's too hard to try and pick tops and bottoms in this market when it just keeps squeezing out. You've got the fundamental picture has not changed. I mentioned that before. Stimulus, there was numbers out on Friday, consumer confidence, which was well below expectations, which is a bit of a surprise considering PPI came out good, CPI lower. So it's a mixed bag, which means that you wouldn't expect the Fed's going to take off their foot off the pedal anytime soon. So you get that Fed support, and they're going to well and truly telegraph that, I guess, to the market. We're going to take support off, and then it'll be interesting to see how it goes because there's still growth. If you're a big fund trader, yeah, we've had some massive growth on the back of stimulus. Now they're taking stimulus off. You would expect potentially some profit taken, but they're also bouncing on the fact that there's still growth into the economy. So you're sort of going from support through stimulus to for an economy that's actually growing and expanding. So it's kind of like, well, I know we're at all-time highs and everything like that, but do you go and just sell the hell out of your portfolio and watch it keep running high for the next year? I think it's going to be a tough gig going forward. So we'll just keep an eye on it. We just trade what we can see. So yeah, long story short, what I thought I'd talk about is some entries. I was having a good old chat with someone from our forum the other day, particularly on the index trading, and I do a lot of the Hang Seng. I was having to play around on that on this morning, so it's probably worth talking about that. I was basically just short about 5 times and made some money, but the last time I took it off because I was getting myself organised, and I've done that before, got caught up getting ready for the stream with positions, and then you're just fluffing around in the stream, wasting time. So I thought I'll take it off early, and sure enough, it dropped another 100 points, which, you know, made money for the day, but it could have been better. So we'll talk about that, and I want to talk about some key sort of setups that I look at. And I'm not sure who is has a background in index trading um, or currency or anything like that, but there's a few key things that you can keep an eye on, and the same sort of price action, I guess, plays out into shares as well. So we'll touch on a few shares. So there's a couple of key points that I want to talk about. Now we'll get started into. So if we can draw a picture, so this could be. Should give my kid to draw it. Right. So this is what I just want to be focusing in on. What do we got? So if, like I said, if you've got some sort of background, you're probably into prepping markets. I mean, what I've learned in the past from, I don't know if anyone knows Davin Clark, and there's a guy, he was associated out of US professional trader, and that was years ago when I was learning from them, um, is to prep a market. You don't go into a session where you don't know the levels, the key levels where you expect some action or reaction. Okay, we talk an action from buyers to push it through, or reaction from sellers to push something back down, or support action from buyers to try to ramp it back up, or they let it flush. There's all these little minor details that you're trying to look out for, but you need to, if you're going to trade the indexes, you've got to prep markets. It's not as common, I don't think, because the bulk of people who trade shares are fundamentalists. But I think if you're a technical trader, it's a really good habit to get into, is know where you want to trade, know what levels you expect, some action from buyers or sellers, or a reaction from buyers and sellers. Okay, so you've really got to prep a market before you go. And like I said, if you jump into a share and you're buying it off a little pullback, but you don't realize you haven't looked left on the chart and you find there's some really big resistance there, it's not a high probability setup. If you're looking at a daily chart and you're buying this little pullback, okay, that's great. It's off the MAs, everything else, but you haven't prepped it and you haven't looked at what the weekly's doing, and the weekly's extended into a key resistance zone. It could go what you think is a high probability setup to a really low probability setup. So I think even on shares, you've got to understand what the bigger picture is and the smaller picture. So you're trading in the right zones. I mean, there's nothing to say that scenario I just mentioned into a resistance zone, you buy a small pullback on a daily or even a lower time frame chart, that it's not going to work. But I don't think it's a high probability setup, and I think it's worth, more often than not, that'll probably fail that kind of a scenario. So you're better off doing the bigger picture and go, oh, look, I'll leave that one aside. I'll go and trade this one, which is it's coming off a base on a weekly base, and it's got a higher low on the daily. Same setup on the daily, but it's just coming off a different scenario with regards to a weekly chart. But that's got to do with prepping a market. So what I'm always trying to do is, if just say we're going, and I think we've got a couple of good examples on the Hang Seng, one today, and then I had a couple the other day, which I was chopped around at the start. But the good thing about the Hang Seng, when you know you're right, when you get it right, there's a lot of fat. So I can lose 40 points a few times and then get it right and get a couple of 100-point runner. I mean, you've got to hold it, obviously, but then you've got to have conviction in your setup, in your levels. And if it's going to break a key level, what's the next thing? It's probably going to start pushing. It's going to make that push to the next level. It's not going to let up until it gets at least near that level. Okay, and if you can sort of look at it and go, well, that's 200-point rally, I'm happy to probably get, I'll have a couple of dibs at this, but you've got to be obviously know how many trades can you have before you go. If you have 4 trades, 4 stop outs for 160 points, trying to make that back in that one run, it gets a lot harder. Okay, but either way, you've got to know what your levels are, what sort of price action you're seeing, and tell yourself a story of what's happening with buyers and sellers. You know, sellers are trying to push down. They tried to push down a few times, for example, and it's not working. Okay, so one of the key setups that I think works, and I see a lot on the Hang Seng, is it goes from level to level. So you're just playing around, and this is about where we'll just change colors. This is about where the market opened, and we're looking at it thinking, I think it's going to go up to, well, actually, we just put a level in here. Okay, so we've got the three levels, and it sort of jams up into a level like that. Okay, you could look at that one leg and go, okay, that's extended. All right, and this is what you'll see in a market. It's probably not so much in share market as such. We'll show you a couple of examples. It's extended, then it's consolidated, and it's gone again. I think that consolidation period is very, very important. You know, if you're looking at it and you're thinking about selling and you start to see some consolidation, you probably want to hold it, because I think there's going to be another leg up. And that's what I look at a lot in the Hang Seng, a lot in the indices, and you know that they will play around a level. And if you start to get this kind of action where it's not there's no real conviction on the sell side and it's getting soaked up, then you want to have some sort of conviction that the market's going to go up, and you want to structure your trades around it. Okay, so time and time again, that's kind of the action you see. You can see it pump up, and I think it's important to notice that it does. I don't know why that does that. For some reason, my mouse just disappears. There's a little bit of a void on the screen, and I can't do anything. You can see just in here. If I go across here, I'm fine. Okay, what's important to note is the pullback too. So a lot of times, if the market's going to go through, the pullbacks are very, very shallow. Okay, so like this could be very, very shallow. It's extended up into a level, shallow, and it's just flushing traders in and out, and then it might reset. So it'll try to flush traders out, flush them out. It might get catch some shorts who are trading off the level. You know, we always say if you've got a sell stop, say here, a sell limit here as the market's approaching and your stops above, they're the ones that are going to get chopped around, and they're probably going to get in and out, chasing their tail, thinking, I'm going to go short again, going to go short again, going to go short again. There's no confirmation with trading that way, because it's just coming to a level. So you can get a market will consolidate like that and then start to go again and squeeze all those shorts that potentially have built up, squeeze them back out, or just dragging some buyers as people who are sitting there waiting are watching that consolidation thing. If this consolidates any longer, I should be biased up because I think it's going to the next level, okay, the next level up. So the difference between, say, that kind of price action and something I think that's going to fail at the level, to me, is the pullback, okay, off the level. And I think that's key. A lot of the times you can see the Hang Seng will just blast up into a level, maybe little things like that, and then it'll fall quite handily, and then you could look for something that's, you know, you've got your lower high to play into. Okay, you're trading off that, but that initial reaction down off the resistance zone, or it's the same with support. You know, it can plow into support and bounce quite hard back. Okay, the difference to me is if it plows into support, you know that's just it's targeting stop losses. Okay, especially on the indices, and it's the same with your FX and anything that's basically not shares. FX, crypto, I'm not 100% sure crypto, but it does a lot. It will flush a level and then fail. Does it time and time again, but to me, if it's a deep sort of a push through, you know, even you can extend this a bit. If it sort of pushes through quite a bit, that's more than just stops. That's kind of some buying through, and then it fails, and it starts to find some support at the level, and it starts chopping around that level. You know, you can get something like a bit deeper push through the level, and then it sort of fails and starts to get some sort of consolidation around the zone. That's what we're looking at. So we're not trying to trade the breakout there. We're not trying to trade short at the level. We are trying to watch it, okay? And it's a difference. It's a key difference. I think it's a big difference in your stats, where if you're just trading, like I said, I mentioned here, where the market's heading higher into the zone, and you're just going to put a sell stop. I'm not a big fan of that. I know it can work, and you've got to have complete confidence in your levels that you can really pick a good level. Okay, so you've got to have confidence there. Yeah, I'm good at picking the levels where it's going to turn. I'm good at picking the levels where it's going to continue. And that's a lot harder because you know the market will flush around those levels, especially in the indexes. So to do that, I think, yeah, it could be it's like a 50-50 scenario to me. Whereas if I'm trying to trade like this and I'm looking for consolidation, then to me, it's a high probability win rate. That if I see that consolidation, I buy off a high low and then I let it run. It could be, I don't know, I'm tending to my stats around the 65% mark, strike rate. Okay, and the same when it backs off and you're looking for that lower high, it comes back up and starts to fail, then you know that you've got some breakout traders. It's pulled back, their stops maybe not hit, and as soon as it starts to press back down off that level, all those breakout traders are going to get they're trapped and they get squeezed back out of the action. Okay, so I think it's a minor thing, but it's more got to do with this, that push through and the initial pullback. This push through and that pullback. Okay, where is it? How far has it gone through a level? Is it pulling back to the level, or is it just drop straight back down below that level? Okay, and then the price action after that. And that's why for me, these kind of entries, you've got that a push through, it's targeted the stops straight back into the zone, and then it's come back up, and then you've got a lower high. If that level breaks, you know that I've probably got that lower high coming to play, and then I'm looking for a move back, offer to bid, we say. Whoops, that's a bit of a mess. You probably can't see the yellow, can you? Let's just mark that up in color. We can see green. It's probably better. Okay, that's sort of the moves I'm talking about. They're the kind of the things you got to keep an eye out for. Okay, let's just go and have a look at an example before I get too far into it and start jabbering on. Now this, just remember which one I got. That's some trading. Can you see that? Okay, should I just? That's probably a bit better. So that's some of my trades. I can't remember what day this was, but this is what I've marked up. This is what I mark up all the time. Okay, so this was from the 11th. So what's that? I think that was Friday. 12, 11, Wednesday, is it? Wednesday. Just had to count backwards on my fingers there. Hope no one can see that, which you can't. So that's I'm probably going to lose it. There you go. And this is the action here, I think. Yep. So that's the trades, and this is the price action. Okay, so I've got the demo account. So anyone that wants to have a bit of a play around with the demo, feel free to jump on the TradeDirect365.com.au, and you can download a free demo. You can just play around it. There's no questions asked. You don't have to sign up a demo account, but you can, just so you can get some more information later. And there's going to be an update hopefully coming soon. So when you hit that, you'll have another panel that drops down the right hand side, which shows all your orders you put in, and you can adjust them. You can trade from charts. You can move them up and down on the charts. Whereas at the moment, it's got the basics from trades from charts. So yeah, just keep an eye out that. What happened there? There we go. I'm gonna have to find that again. Just bear with me 1 second. That's not it. It's the other example. That's day before, and I want that. Okay, so this is the price section. This is what we were just talking about, consolidation into level. You can see, from my prep, I had a couple of different scenarios. I thought if it goes through this level, there's actually another resistance zone. Actually, it was just below that. Sorry, it was just above that. So this is what I've marked up from my prep. I've marked up a level that came through there. Okay, a resistance zone. I thought, well, if we chop around there, if we fail, I'm looking for those scenarios. So I'm only wanting to trade off a particular level. All right, so I'm not going to be trading. I don't really want to buy within the level unless I see some solid price action that I think, and that was what's happening today. It was kind of in between two levels, but I was buy short because of the way it was acting. Okay, but that was slightly different. I had to wait for that sort of the price action to play out, and once I saw it, then I could start to pick out some shorts and trade it slightly differently. But when you're looking at your levels that you've prepped and you've got a particular scenario, I'll draw scenarios up all the time. So I might draw. Let's just draw that. Well, that's not really good. I'll draw it down here. So this is a scenario I might be looking at. Now I'm going to freeze up, am I? Is it disappearing? Yeah, my mouse is, what's going on here? Doesn't like me today, does it? Just draw it here. So I would mark up my, let's go, come on, Braden, wake up. That's really weird. All right, wake up. There's my scenarios there. I would mark that up and say, okay, that's what I'm looking for off the level. But if I want to see it through the level, I ideally want to see, something like this. That's what I'm looking for. Okay, so I know that I'm at a level. I just don't know where it's going to continue on. You're gonna have to fade that level, or you're going to buy it off the level as it's starting to rally. But what I do know is that I've got a couple of areas that I could be trading to. If it's going to fade off there, there might have been another support zone. I think it was somewhere down here, just below, and then I could fade it off that level. I'll go the offer zone, or offer to bid, we say. So selling, sell zone to a buy zone. And here, if I'm going from this sort of zone, a sell zone to another sell zone, in essence, or once it starts to break, it becomes a bid zone. They buy it up, and you're looking to target the next zone up. Okay, so that's basically all I'm looking for. Any questions, just ask on the way. I'll just chuck them in, and then we'll get into some looking at some shares. But you can see it's quite obvious. I had a couple of trades on there. I can't quite remember. Yep, you can see I had a long, didn't go anywhere. I was quick to take that off because I didn't think that would come off. Then I went short. No. Then I went long again, which didn't work out. Then I went short, which didn't work out. But the key for me was this little fail. Okay, and this is what I was mentioning to when we're having that chat with someone else from the forum. It's not working out too well today. Once it failed here, I was basically long because I was seeing enough consolidation, and I could see that the buyers are stepping in, they're soaking up, they're not letting it fall back well down within the zone, and really noticing this pop up, pull back, high, low, back up to the high, back down to the low. You could see that it was choppy, but it was chopping around that level. Okay, so for me, once I saw that, it goes into that first scenario. We're going to consolidate, and my thesis from there on in was to try to trade long and hold on to that long and see if we can get back up to that offer zone. Okay, which it just fell a bit short, and I think I took it off. I can't remember. It was actually a really good trade, but all up it was about 50. I think it was 58 points for the day, which is a good little day. Now, if I go down to another example, get rid of that. I don't need that anymore. I'll get rid of that. So that was the first one, and the second example was get rid of that. 68 points for the day. So again, you sort of popped up. We pulled back, we consolidated around that level. And you can see there was a couple of losses there, but I think I was biased up the whole time. I actually went, I think that first one was a loss. So it was a long there, which didn't work out. Then it was a short, and I got caught in the trap. I actually thought that was going to be a secondary leg down, and we might start to fail off that level. Got caught, took it off straight away. And there was a couple of little, false starts. I was a bit edgy after those shorts, but then once you saw this consolidation through, and you can see it pop through, the pullbacks weren't very deep at all, and it was getting soaked up. You can see it time and time again. It was just getting bought up. And the same scenario that we're going to hold that level, we're probably going to advance to the next level. Okay, and you can see that the buy, and we failed just up at that level, but look, all in all, it turned out really nicely. Okay, so it was the same sort of scenario. You're just watching that consolidation, and you're ideally trying to work off a higher low, which you can see. Okay, I wouldn't want to just get back to. I should just clear news. No, I don't want to do that. What I'm looking to do, just clear all that off. Sorry about that. What I'm looking to do is if we start to get up through that level and I'm not too concerned if we have a couple of little legs down. I mean, what that does is kind of sucker in a short sellers. They see that lower high that comes in, but what I'm doing, like I said, if that market presses up and it doesn't fall straight back down, and that's the difference. You can see when you're trading it, you can see there's a clear difference between in the price action. Price action when it just comes straight back down again, meaning you can really see that the bids have just disappeared, or when it's getting soaked up by buyers and you get this kind of secondary leg down. That to me is where you're going to form, and you just trade it. You trade the break off a lower high below the level, but when you start to get something get soaked up, you get a little pop back above, and it has another grind down. To me, I'm waiting for a higher low to trade from. And it's as simple as that. Once you get that higher low, then I'm looking to see if we can press up into another resistance zone. Okay, but ideally, once we get that higher low coming in, there's two things it's going to be cause for concern to anyone that's shorted. Like me in the first example, if I could just in that example trade, where was it here? Okay, once we start pressed down and we failed straight back up again, okay, and we took out this, it's not quite a high low. The high low is a bit later on, but either way, we've got that high low. That's concerned that anyone that's shorting at that level is going to be fodder for a squeeze out, okay, and another ramp back up again. And the same thing happened here. You can see probably a bit harder to see. This is a 1 minute chart. Yep. But you can see that first move down, pop back up, secondary move down, and then we start to hold the higher levels just in here. And as soon as you break to the upside, to me, that's enough confirmation that, okay, we're going to ramp up again. Okay, so it's a good, I think it's a really key sort of thing. And the way I would look at it with, what do we got here? This is Treasury Wine Estates, the TWE. The way I would look at it here, actually, there's a better example. We'll get the IFL. IFL is something we got into at 450 just recently. It has popped up and it's just sort of floundering around a bit today without doing too much, but the overall, it's holding up quite well considering the market's down 32 points. But the way I'm looking at this is that it was mainly from the weekly. Okay, it's not particularly consolidation at a key level, but it has picked up off some lows. So I think it's just draw that. That's not what I want. That'll do. Some mouse, here we go. But it is similar type of theory behind it. Okay, so you've got, it's not really working too well at all, is it? So you've got support through here. It's quite clear when you come into the level. This is the first time when it's actually popped up above the MA. So to me, if I see something like that, it pops up above the MAs on the weekly, for example. It could be on the daily too. You know that people have been in a sell mentality. Now, that's this zone in here is different to what we saw just up here. Okay, because it's popped up and it's straight up above. So it's kind of pressed too high for me. So it falls within the retracement. That's what I would expect there. And the fact that up here you've got higher lows and you've sort of got that wedge formation, to me, that's not so crash hot. I would rather see something that pops up and then a wedge to the downside, for example, which you sort of get here. Why isn't that mouse working? Okay, so I don't know, I might be running out of batteries, but you can see that there was slightly, on a daily basis, slightly lower highs. Okay, so to me, that's a completely different scenario than what we saw here. This is not where I wanted to be buying into, okay? And it has extended quite a lot. So it's kind of like a big reaction higher. Okay, so to me, that right up until even these first few days, I wouldn't be getting involved and I'd be watching. I want to see a pullback. I want to see it bounce back, pull back to the MAs, which it never did. It sort of held up off the MAs and then failed really hard. All right, so I wouldn't want to be steering. I'd be steering clear of that completely. But this is that kind of scenario where you're coming off a nice base there. We've had a push up and then it's consolidated. So it's like what we're just talking about on the indices, but with a slightly different bias, I think. And the fact that, I like that too. When we start to see, that's our key resistance zone. You've got sort of these minor levels. It's come through, it's consolidated there. So at the very least, what I'm looking at is a push to at least $5 or potentially above. So I think this weekly, this kind of action could be the start of a new leg up, right? And that's purely because of that consolidation through there. We had some really nice consolidation. So the fact that it's not going to new lows, it keeps holding up. And it's probably clearer seeing that on a daily basis. We'll draw that down. You can see that it keeps getting soaked up on the MAs. Yeah, okay, got a bit deeper. I mean, nothing just in here up until this stage is looking too crash hot, but the fact that we flush down and we react back up, flush down through the low especially, react back up above that level. This is probably the reverse of what we're saying. If we just get that up now. We've got this kind of level through here, you can see. All right, we've reacted off there, and this is quite important. The fact that at the moment, we're going sideways. So look, that's pretty nice. If you have a bit of a rally like we've had here, a good leg up, and then we start to consolidate, if it was weak, you would expect that, touch, lower high to lead to a good push through there, and then you'd be looking for something like that, reaction back off the level and then a failure. The fact that it didn't, it sort of held up and then it popped back up, retested again, and then it couldn't get through. So if the market's going to retest a level it can't get through, it's going to have to just flush out some buyers. And that's exactly what it's done. So it's pushed back down, but it's quite key if we just take all that off. this to me, we pushed below a level and finished back above it in that one day is a prime example of where, okay, that level is going to hold for me. And the very minimum, if you can start to see that price action and you can see these kind of setups and you've got your high low in here, you can see that consolidation where you're starting to get overall consolidation sideways, but within that, you're getting that point of agreement coming in. And for me, after seeing something like this, a reaction back above, the buying is still strong. Okay, so the whole way along, I've been telling myself a story. I've been seeing the market press up. Okay, it's failed. You'd expect that. We found a bit of a bid in here. We've reacted back up. So, okay, now you can probably, you got 2 points there. You can put a bit of a support zone through there just to see if it holds up and see what happens after that. Okay, we failed off the highs here. Okay, we can put a bit of a resistance zone up there and just see what happens. Then you can see the next few days, it's been chopping around, retested the highs, went back down to the lows. And as soon as we get this inside, just back above the level, and that's that thing that we said before. It's the reverse of that sell. You know, you start to go back up and you build the higher low. As soon as you break that higher low, to me, that's reason to see that we've got the flush, we've got the higher low, and then we start to ramp back up again. Now we don't know if it's gonna stop at 450, you continue on. So at that stage, our buy was through 450, stop below, because I think to me that's enough consolidation along with this kind of a breakout to the upside and this failure to go down with this move and finish back above. That all to me adds up to a nice little picture. And the price action to me is telling me we've got some strong buying coming in. They've soaked it up at support. Look, they couldn't get it through the first few times, couldn't get through here or here through the resistance, but look, they'll just let it back off. Sellers get caught. You know, people who are holding it through here that might have bought it through those, you know, on those highs, or at least looking for it, they're getting squeezed out. They got trapped. They're sold. They closed out. It's finished back above, and then it started to build. So someone is soaking it up, or some people, traders are soaking up through here. Okay, and that's a nice little consolidation pattern. Same sort of theory as what we're just talking about with the indices. You got your higher low, and it start to ramp up again. So that to me is good enough excuse to go buy the break, because I think if it's going to get through that 450 zone, especially with that weekly price action, couple that with that weekly price action, as it's pushed above the MAs, it's consolidating sideways, it's holding on the MAs, rather than pulling back to the MAs are catching up, and we think anything that's going to start to expand back up again is going to lead to a nice little buying opportunity, and that's exactly what played out. Feel free to chuck in some shares now. We'll start to look at them. While you do that, I'll just have a bit of a talk through or walk through the, I think that's probably not one that I want to look at just yet. Actually, this is NIC, Nickel Mines Limited, that I've got my eye on at the moment, and we might as well talk through that, because I think that's is a case of the same sort of thing. You know, you've got it pressing into a level, then starting to consolidate. Okay, when it starts to fail, as the market started to, you know, pick a direction, I want to just worry about. So we never had a good run up. That should be clear enough here. So we've had a good run up here. Okay, we started to, you know, obviously up here. So the way I'm looking at this, that's your pullback. You've got a new high here. We failed all the way back down to that, which I don't think we should do. You know, that if I see something like that, you've got to question how strong is that trend when you get a high and you come back down to the anchor. So for me, that's your anchor to the uptrend at this stage. Okay, when we're looking at, we're going just from left to right. That's my anchor. We power up into new highs, we take out that high, and then we fail all the way back down to the anchor again. Like I said, that to me is not strong price action. Even though it has gone back up to the highs, I'm starting to question whether we're going to go into new highs. So if I see something like that and I want to be a buyer, the only reason I wouldn't buy that breakout there, it would never, because my risk has to be below the anchor, and I'm not convinced that that's going to continue on. I'm sort of seeing that as the start of a topping pattern, or some consolidation around the highs, and potentially you're looking for a pullback. So if I want to see a buying opportunity, I want to be a buyer, I want to see that pullback, and I want to see something like that before it takes off. So I know exactly where my risk is. I've got a key higher low, and I could get an inside higher low I can work off, but I know that's going to start to pull back off the MAs, and I want something like that if I want to be a buyer, because then I know exactly where my risk is going to be. And if it starts to break out, you know, and I buy through here,
I'm pretty sure you can see that on a buy with this structure. Off the MAs, you know the MAs are still grinding higher, and you know, okay, this was just one of those pullbacks to the anchor. There's still a lot of strength in the market, and people are still wanting to buy. But we don't get that price action. We move all the way back down, basically to the anchor level, and you can see this market is starting to hold lower highs, and then it fails, eventually fails. If you're looking to sell, like I said, if we just take that as a, I didn't see that sell setup. Actually, no, I'll just keep that in there. You can see that's the level. That's the two levels we started to look at. We don't want to be a buyer here. We didn't get our buy set up. Okay, the market's head down. You've got a lower high in here, lower high in here, lower high in here. So to me, I still wouldn't sell if I'm thinking about entering the market now. I'm not thinking about getting out. I would have been out probably. I would have probably potentially had my stop just below that. If I start to see this price action up here, a double top thing, after heading back down to the anchor. So you've got failure here. Okay, bias is still up. As soon as you get that failure up there, then you're either going to go sideways or you're going to roll over to me. That's what I'm looking for. So I probably would have tightened the stop up. So if I'm looking to enter into that market, I wouldn't enter on this breakout because that could just be a flush of the level like we just saw in our last example. What was that? What was that? It was IFL. In our last example, let me get that chart back up. These lower highs could press down. What it could do is, again, flush, bounce. What it does is trap some sellers, gets people out, and it bounces straight back again, and it drags them all back in again. Okay, then you've got your setup long, potentially looking for it to at least work back up to 150 and above. Okay, you probably, whether you're going to expect it to work back up to through 150 is a different story, but that's not where I'd sell. I'd be selling right here. I think this is a beautiful setup. It didn't play out too well, but you've got that powered through, it flushed some stops. So as soon as it flushed some stops and it starts to grind back up, and you can see that in the way it's gone with two legs back up, and it start to fail here. Okay, if I was going to enter short, that's where I'd enter short for. Okay, from. And then look, it didn't really play out. You got that retest of the breakout area, retest of the lows, and it started to get lifted again. You'd be out at a small gain. But either way, that's it. That's a nice setup compared to just selling on the break there and potentially getting caught in a flush. I'd never want to get caught in a flush. I want to trade when I can see that level's broken, so that's a key level, and then it grinds back up to that level. When it grinds back up to the level and starts to fail again, anyone who didn't get out up here is going to have to think twice or going to have to hold. And what you're going to get some people that are going to sell to exit. Okay, so that's on a side note what we're just talking about, the difference between getting through a level and looking for failure or coming back up. Okay, if I can just draw that a bit clearer, that's a difference between that kind of action. So we had one on IFL, IWF, whereas a flush and finish straight back up above the level, and then we're looking for buying off that zone, or the fact that it's gone down, and even probably it was a bit better saying something like this. There's only some minor detail to it, but you started to get that failure like that, a bit of a grind back up. So to me, same scenario, selling the stop, selling the breakdown below there with your risk above, and just seeing where it goes to. Okay, if you're shorting, if you want to get into some shorting on the shares. So that's Nick NIC. What I'll talk about now is just where we're at the moment, because I think it's sort of what we've been talking about playing out. Okay, so what we've got a big move up, then we've got to move down. So if you've just taken the context, so this is on your weekly, we've broken the anchor like we said on the daily, we've gone down. So that's the big flush. From there, what are we doing? We're just marking up some support. Okay, where's our key sort of levels to look at? Whether we're going to get continuation down, or we're going to start to get some sideways consolidation, or we're going to start to get a pattern that's going to build for a new leg up. But this, to me, when you see something like this, it breaks the anchor on the daily. We've got this anchor level. It's now broken. Not a lot of follow through on the downside. So potentially it got a bit stretched up here. We need to clean out on this move down. We need to clean out some buyers, which is done. And we're starting to hold up. You can see that by, okay, push down. At this stage, we've got a lower high in here. Let's just mark that up. Lower high. We've got that lower high playing out here, and then we've got the market pressing back down, but it started to hold up at the same level again, which is around that 95 zone. Okay, That to me is key. And then we start to press up. So for me, I'm looking at something like this now. I'm seeing that, okay, we pressed down, we may just be consolidating. So what am I looking at? Are we going to consolidate here, or are we going to roll over? Okay, we're going to roll over and go back down. The fact that we plowed straight up through that $1.10 mark and we've come back down, we're consolidating there, I'm looking for a higher low. Okay, so I'm looking for something now, a pattern like this. So we've got one leg up, we're finding support at $1.05. I'm expecting another push up through $1.20, which would lead me to believe we're going to start to work our way back up, potentially to 350, even if we fail at 350. Risk reward, great little trade. If we go through 350, if I can get back to the weekly chart, that could easily be a new, good pullback to the weekly MAs, consolidate, starting to go up, pressing and consolidating back at the level. It can't go through. It's tried it a few times. I'll get rid of that. Where are we? This one. You can see it's tried press down, lower high, and it's getting the same sort of pattern as what we saw here, we're seeing now. Okay, potentially. All you really want to do, you're assuming that 105 is going to hold up and we're going to get the same pattern. We're going to start to break up and you're going to try to take it nice and early. If you can take it at 115, for example, stop below 105, it breaks through 115, and then you could probably look at that going, that's your key higher low, because what we've done in this kind of pattern now, broken through, and we're looking for that W to take us up and through. You're getting nice and early at say 115, 16 or so. You got it through. You would expect it to go through 120 and not really look back and get a good little move onto at least 150. Okay, so I hope that makes sense, but that's all got to do with the way, we've talked about some indices, we talked about a couple of shares, how it consolidates at around levels. Okay, if it was going to fail, it's going to fail quite hard in this. Even if we pump up through there's nothing to say we can't just fail straight back down, do this kind of thing and completely capitulate. You don't know, but the fact is, we're trying to follow the bigger boys, if that makes sense. I know everyone talks about that, but they're not just going to buy, all your position in one hit. They're going to have to be buying at levels. They're going to have to buy at higher levels, as they soak up any selling pressure. But they're going to buy potentially into some weakness. The weakness has started. Weakness is down here. They might have edged into a position here, down at the lows. Again, some more at the lows. They break out. Okay, they're buying some more there. They're buying some more in here. You don't know, but you're just trying to follow their crumbs, as we call it. They're going to leave some sort of heads up that it's starting to build. You're not trying to just buy into support, expecting that support and expect it's just going to go straight back up again. It doesn't quite happen like that. It's going to test the level, especially after a pullback. When it's broken an anchor, like we were saying, this is your trend up, broken, it's now trending down. It needs to find some support. So you can bet that it's going to trade it at a couple of times, retest support, retest, maybe flush it and bounce straight back again, like we saw with the IFL. But either way, you wanted to see some consolidation. You're starting to see them support it at a higher level, and then you're looking for that run up. Okay, so I hope that all makes sense. I hope that's worthwhile explaining. I'm always looking for key things like that around the Hang Seng, and I would never trade the Hang Seng, like we say, off a level. Just checking out where that is at the moment. It's heading back down again, so yeah, so that's the Hang Seng index at the moment. So I was trading short there. I got out somewhere into the support. Awesome. And it's dropped another 100 or so. It bounced back, but this could be a clear example where it's spending some time. We know we've got a support zone through here. We flushed it. We bounced straight back again. So to me, it's key whether we're going to, I would ideally, for weakness, wanted to see something like this back up, and then I would expect some failure. Something's definitely wrong with this. I think it could just be the window. Anyway, let's just get rid of that. Don't worry about that anymore. Okay, so what I was trying to draw is the market pressing down from here. That's it. I wanted to see that. So if that's what I want to see for weakness, but you can see it could just as easily start to hold up, off, and go. Okay, you start to get that compression, but it hold the level, consolidate around, hold. You're looking for a long position because of what's happened here. Flush down, straight back into the zone, and then so I'm essentially going to be biased. I would expect that to hold that zone and potentially have a bit of a pop up. Where it goes to, who knows? It could just go a little bit further, hold the inside level and then straight back down again. But either way, I'll be positioning myself. If it starts to hold and ramp back up from here, hold a higher low from here, I'll start positioning myself long in the CFD. But if we start to go too much down, we start to attack closer to this low, I'm looking for that any sort of buying back into the level to fail. Okay, so you can see how it's not so clear cut when you're around a level. Okay, you've got to be careful. You don't just, you can see the chop there before we start to fail. That's different to something that's pressing up from level to level. Okay, we reacted up and off, we press up, so it holds nicely all the way up. So you can see these zones in here were really nice to trade off long. Okay, let's get into BRN. We'll get these done. TNT and VEA. So any questions on that, just send us an email. Or feel free to ring me up and have a chat. All right, so put this one up, BRN. So this is one I have been watching for a while, and I think someone else might have been watching this as well. I'm quite sure. It's probably better on the weekly. What concerns me is you can see the level at 70 on a weekly basis, okay? And I just want to talk about a couple of things because I use MACD for strength and weakness, in momentum, and you've got to couple that with price. I'm not trading crossovers. I'm not trading these crossovers. I think that's a waste of time. You're trying to gauge the strength and weakness in a move, okay? Because if someone is trying to build a position like we just mentioned before, and they haven't finished building the position, they haven't finished building this long position, for example, they're not going to be buying any breaker. They're not going to let it. They're just going to let it run its course and potentially sell back into it, to get it back down again, just to create that failed follow-through momentum. Okay, but what you want to see is how is momentum going with the move. So this one's a good little example where, to me, that's a key fail up here. Okay, so you've got to, at this stage, right there, you've got to put it in the context of what's came before. Okay, and you can see the volatility is expanded quite a bit. So I don't know whether, I'd say the value of volatility around here was about 5. Now it's up to 40, for example, with this spike up here. Okay, but then when you've got that high volatility, you're going to get those high reactions down. So it has a good hard reaction down. Then it held a decent reaction back up. Okay, then it failed. Okay, so but you can see those daily moves of the reactions are getting a bit less volatile. So around this stage, we might have volatility at, I don't know, 25, for example. Okay, then a good reaction back up. But what you can see is momentum starting to fail. Momentum up, we've got momentum, it can't quite continue. So for me, when it starts to roll over at a lower level of momentum, for example, I'm expecting more failure. And then when you get this kind of a candle, I've got to take over everything, do I? That candle there, that rejection candle, I think that's exactly what we said before. When it pops through a level, you know that you're going to get breakout traders buying the break of that high. I don't know where they're going to put their stop. For me, that stop has got to below the most recent high or low. They bought it. It's finished back down below. I wouldn't want to buy it just yet because I know that, well, I would expect we're going to at least move back down to that low, back down to here. And we are. The key thing to notice is that momentum up has faded quite a bit. It's back down to, MACD's back down to the 0 line, but we are holding at a minor higher level before. Okay, and I know that because you've got a couple of red candles, and this is only on a minor scale, but it's all relative. Okay, we've got, if you can see it, these candles actually make up a minor lower high, which has been broken. Okay, so what you've got is the market's pressed down into a zone. You've got that kind of action there, and then we've broken it to the upside. So we've broken that zone through there, which you can see, which is at 50. Okay, but all that makes up a higher low. I hope I'm not losing anyone there, but you can see that move down there, it's still failed to get back down to 40, which is at this level, what we just mentioned in here. Okay, so to me, that's all relative. So to me, that leg down is starting to fail. And we're going to do two things. We're either going to push up and start to hold another higher low, we're going to potentially go up, hold a higher low, and then go. And that's what I'll be looking for. Then it's going to start to run on and press through 65, for example. Or we're going to have a bit of back and fill and we're going to fail from there. Okay, so that's the two scenarios that I'm looking for. My weight would be on, because we held around that 45, we held up off the 40 zone, and momentum's faded quite a bit. You can see that's your first momentum push. We had the bounce, failure here, another momentum push lower. We've gone back to the zero line. That I love seeing something that goes to the zero line, starts to hold back up again, and I think we're going to hold up. And I would be looking for that scenario there. Okay, pop up, pull back to 50. If it can hold 50, then I'll probably be happy to buy that break. Okay, because to me that's meaning that we're going to start to break that downtrend. Okay, and we're getting some sort of contraction in. We're starting to hold, and we're going to be biased back up again. That's what I'll be looking for. Okay, and there's some really minor detail in that price action, but you've got to put that together, what it's done previously. Okay, you can see that we got through the breakout, we've retested it, and we took off. We might do the same thing here. This is why I'm looking at that sort of scenario. We've broken up, pull back to 50, retest it, and fail and go back up again, and see if we can get a good little momentum push up. And that makes sense with regards to momentum in the MACD. If you can start to hover at zero, turn back up again, you get another momentum push. There's a lot of room to move with regards to momentum to the upside. Okay, and then you're just trying to buy with your risk and see how it goes. We'll do, see if we can get to that. Okay, we better start getting through these. TNT. TNT is just something what we've been talking about. The market's flushed a level, and it's bouncing back up. So what we've done with this momentum push back down, we've only got so far as we've broken, say, that level, around 20 to 22, or thereabouts, before we've reacted back up and off. And the fact that momentum's pushed up, what I like to see is obviously the MACD momentum starting to push up. I want to see what happens on the first pullback. And if the pullback can stick around this level on the MAs, then I think this could be a nice little higher low off the MAs, and you're starting to look for, break up through that 33, and you're starting to target up towards 42 and above. I am on a daily chart, aren't I? I'm on a weekly. So that's regards to the weekly chart. But what I wanted to see, if we sort of soak up a bit of a pullback here, or soak up a move back into 27, 26 on the daily, and it could easily flush. This could be a flush of what we just saw before. Better draw that up. And it's a really important thing to notice what the share does. What does it, what does it do time and time again? You can see that it flushed here and bounced straight back up again. And then we've got, well, we didn't quite get to that level, but we flushed this low with a move down before we started to lift again. So if we're going to do that, potentially you can see that market's moved down and pop back up. If we start to hold that level around, say, 27, I'll be looking at, then I'll be looking for a move back up through 30, could take us through this high, and we started taking these highs there. But at the moment, just probably have a little bit of work to do from a daily perspective, and that would work into the weekly chart, which we were just talking about a second ago. A bit of a pullback, holding off those MAs somewhere around 27. Then I think if they can hold, bounce off there, spend a bit of work, buyers hold it, then see if it can ramp back up again. So get onto the daily. TNT. Whoops. VEA. And go back to the weekly. This is, you can see that the weekly trend has been down. It sort of oscillates above and below the MAs, but generally you can see there's MAs from about here. When was that? 2019, mid-2019. It was opening up to the downside. So pop back up above. The MAs are down, so I wouldn't be buying that at all. Okay, I'd be more inclined, if I was looking at that weekly, to think it's getting extended. If I want to buy it, I want to see a failed push down to this low. You can see in here, failed push down. Instead, it went straight through. Okay, so from here, momentum down, back to the MAs, held in here, back down, held a lower high, back down. But what it's doing now is holding. And that's, I think it's important. We can probably go to the daily because we've got that zone through there. So that zone through there is your weekly, okay, from your weekly. So it's pushed down here, big flush down, back up to the MAs. It's tried to go down here. You can see, and it's important to notice how many moves it sort of takes. Does it take a couple of moves? Is it kind of tentative to go back down? Like this move down was just bang, straight down. And that was, yeah, that was the start of the pandemic, I guess. But any other move, it really starts to get through lows quite easily. So if it was going to go off this double top in here, you would expect it to be one sort of move down into this low, so at least to power into that low, but it didn't. You can see it pushed down, popped back up, another push down, and then failed. So then we can start to see that there was buyers stepping in here on this as it was starting to press down. Okay, we've got another lower high coming into play. That's fine, but the second time we pushed back down into that level, we failed to get through that, and we failed to get down to 140. So there is buyers, back to the daily, there is buyers soaking it up, soaking it up, soaking it up off that level. Okay, so what do you do that from there? You know that that's essentially your double bottom, triple bottom, whatever you want to call it. But you got a double bottom. So I'm always looking for what's the most recent high. Okay, if I'm looking for a longer term move up, because just because it's stopped here on a daily basis doesn't mean we can't come retest this high and fail again and go straight through the support. You just want to see what happens. So, I mean, yeah, if you're buying here, you've got your risk. You're working from this bid zone to the offer zone. So that's your most recent lower high that could cause you some problems. Okay, and it potentially did. So you could have got stopped out just through there for a small gain. But what it's done is pull back and built a higher low. So that to me is a key higher low. All right. And it's broken a level, broken again. Look, we're not convincing to the upside, but for me, that's starting to show some signs because of this major double bottom through here. And then you get a higher low, that the weekly's starting to take hold and we're starting to press higher. Okay, so what it is really just some longer term traders. They need some more conviction. It hasn't quite given them a lot of conviction on the weekly just yet because you've got a key level around 230 that is still keeping the pressure down, but offsetting that is that level at 160. So that there will start to drag in slowly, bit by bit, dragging some buyers. Okay, and the fact is we bounced off the MAs here to $1.90, bounced off, we're potentially bouncing again. So if we're looking to bounce off the MAs again on the weekly, you go into the daily to show what that picture says. And for me, look, you could probably just about buy it on that little breakthrough 205, 210 even, with your risk below, anticipating we're going to do something low. So we're going to at least get up to this high. Even if you pop through by a few cents, that gives you a good little risk reward. If it fails again, so be it. Then you might have to take a small gain on that. But this could be the time that it just ramps up and through it and it doesn't look back. There's nothing to say that we don't, just get straight through and then we hold it, a good leg up, as opposed to just getting through slightly and we just get up through these highs again slightly and then before we fail all the way back down. Okay. So all you're trying to do is add up what's going on with the weekly, the daily. Are we in a good position? Yeah, look, we are. MA's up in the daily, MA's up in the weekly. We're holding off the weekly MAs. Everything's looking good. I like the way we're just bouncing back off on the MACD. So to me, that we look like we could get a change of momentum, bit of divergence, if you want to say that. Change of momentum. We sort of pull back the zero line. We start to head back up again, which would probably be confirmed if we get that breakthrough 210. Then that MACD is going to start to head to the upside. Momentum's starting to be up, and it's really just a question of whether we get through that 223 or so. Okay. So you can see that that's one to keep an eye on anyway. What do we got here? VEA, DCC. Look, DCC, if you looked at it on the weekly, not looking too crash hot. So we won't worry about the weekly because the weekly it's just got below the MAs. It's not really consolidated. It's sort of, and you can see it if we draw that up here, popped up, back to the MA, bounced off the MA, didn't do too much, back, had to get through that low. We took out the low, the recent low, so what was that, What's going on with my mouse? It's really weird stuff today. Let's get rid of that. Okay, we bounced off the MAs here, back to new high, took out this high, back straight back down, took out the low, lower high, took out the low. So really, it's still contracting. The key thing is, on the weekly basis, if you're looking at this move up, that's your anchor to the trend up. It's still at 3.5 cents. So technically, we're still in an uptrend. That's the way I would define it. We're still in an uptrend on the weekly basis. We've got a bit ahead of ourselves, and it's just flushing out a lot of buyers from this move up. So if you bought it off 2 cents or so, you might just have to sit there and wait. I mean, it could be the fact that we come all the way back down. I don't know. Okay. All I'm saying is that the fact is we're held off the MAs here. That was a good leg up on the weekly basis. That's your anchor to that uptrend on a weekly basis, and we haven't broken that anchor on a weekly. We have on a daily, obviously. That's sort of your anchor. You can see it was somewhere around just under 7 cents. It broke that with this push, and it did break it, but it's still grinding down. So really, we're in a bit of a grind down, contraction on the daily. The weekly's technically in an uptrend. We're contracting on the daily, so you want to be buying it when it's back into an uptrend on the daily. Okay, so we're really just going to define our parameters for that. Just get rid of that. And to define that, I'll just be really looking at because what you're doing, if it goes back into an uptrend on a daily and it's trending up on a weekly, you know that's probably going to drag in some buyers. So what I'm going to be looking at is that's your contraction. Look, we're at a really good point here. And you can see it's not getting through the lows by anything significant, which suggests to me that, yeah, there's some buying coming in, but they're soaking up. They're not going to buy at a higher level. They're just letting it come to them. You know, I'll put in a bid just below the most recent low. Okay, they get tagged on that bid. They might put in a bid a bit lower or wait to see what happens there. Might buy a bit more here. Okay, it breaks the lows, we'll buy a bit more. Okay, but they're building up a bigger position. All right, it's only a small stock, 45 million market cap, so it might be that that's the way I have to buy it. So what you'd be looking for really, honestly, a power up through, and I'll be looking for a higher low, something like this, you know. Sits back on the daily MAs. I want to see it push up, a good extension higher, you know, because we could have an extension higher and fail again. But the fact is that that's your downtrend, which we've touched on a few times now, and potentially we're going to touch it down, fail. I don't know. But if we power up through, we're starting to show signs we're breaking up and out of that contraction. And if you break up and out of contraction, great sign for longs. You've got to be biased up. And for me, the last step is the entry. And the entry is hopefully we get that high low, bounces off the MAs, buy the break of the high low, and away you go. All right, with your stop below, because you know exactly where you're putting your stop. You know that potentially you're buying on the rise on the daily, the weekly's on the rise, and then you can just see, you know, basically see where it goes as you get through 9, get through 10, go to new highs through 13. Who knows? DCC, DRX. Does that make sense there, David? If not, just shoot me a message, mate. All right, so this is probably, who put this up? Joe, what mate? That, if you look at this one here, okay, it's, what's the weekly telling me? Okay, the weekly is a bit tougher because you've had, this is a leg up, okay, a good leg up in the weekly. It's potentially broken the uptrend on the weekly chart. You could probably say that's your anchor through there, which is right around 28 cents. It's broken that, that's fine. Let's not worry too much about that. Let's look at what's happening now. So you've had a good leg up on the weekly, contraction on the weekly. So we're looking to buy on the rise again. Now, if we look at this, there's a good chance this is actually just starting to trend higher, or what I would be looking for. All right, here you go. That's your contraction, and you can see that, yeah, if that's what we're marking up, we're defining, you can see that it's all kind of working. You know, we've taken out this low, we took out this low, took out this low with this push down, couldn't take it out this time around, and we held slightly higher level, just above the low, which was probably 19 cents. We held 20 cents, and we're broken up. So that's where I want to see the last stock. What was the last stock? DCC, sorry. We haven't done that yet. We're hovering somewhere in here. Okay, this is broken up and out of that contraction. Now, for me, I'm not just going to buy with that. It comes from the index trading. Indices will break that kind of contraction and come straight back down and make a new low. Okay, so it's made me cautious, and that's why I always look for a high low. A high low means that the market's starting to rise, but there's no reason why we can't do that, break up and out of contraction, and come straight back down again, because you never know. You can never anticipate, because you've seen that structure before. That's what's going to happen. So I'll anticipate the high low and I'll buy. Okay. Or we see it just go straight up like that, and you see that and you go, I'll buy here, because you just don't know what's going to happen. But when you get this high low, if that's starting to play out now, potentially buy on the break of 28 with your stop below 23, you know exactly where you can, what we say, box up your risk. Just draw that in a different color. You sort of boxed up your risk, that high, that low, and you go, well, look, if it breaks back up through 28, just here, I probably want to be long, and my risk is just below the box, okay? Because that's our high low, and that to me suggests that the market's starting to press higher, okay? We've had a good leg up here, good weekly pullback, and we're looking for that next weekly leg up, and this is the daily starting to hold and starting to leg up as well on the daily chart. So you're sort of buying the rise in both of them. That makes sense? So I think this is a nice little example. We'll just see how it plays out. Maybe it gets to 28, gets to 28, 29, fails, who knows? But you know where your trade is now being positioned, or where you built your trade, your premise for the trade at least. And look, if it does stop you at, say, 28, 29, sorry, 28 and a half, 29, you buy that break and it tags you on the stop, it's just something else is going wrong. There's something else at play that you don't know about, and all you can do is manage your risk. ING. ING starting to rise. And this is probably comes into the fact that what we're talking about, actually, this is probably a good example. Go to the daily, so you can see what the weekly's done. Leg up here, failure through 2019, retest the lows through 2019, held. Okay, so that with a prime level, flush the low here. And look, actually, that's beautiful. If you look at that price action, excuse me, starting to get a croaky voice. Okay, we've taken out the low. It's not working either. Just in here, and we bounced straight back. So that weekly candle is quite strong. The fact that we bounced straight back, held a higher level and took off again, okay, is a heads up. So on a weekly basis, that's your level you're looking at. Okay, Ingham's, we had this. What did we do on Ingham's? We lost, I think. Or did we? Anyway. So this is kind of the price section you'd be looking at. Failed there, straight back up off that high low, flush through the high. See, for me, if you're trading purely off that weekly chart, you might just be looking at it and going, oh, just better be careful, better be careful. Okay, at this stage, I'll wait for a high low. We've got up through there. You haven't really got your high low, come all the way back down again. And you can see how we just bounced off that level 310. So to me, I would look at that failure off that level at a higher level. After this price section here, I could refine my entry. I'll be looking, if I was trading purely the weekly on a longer term basis, I'd still be looking at that daily price action to see what happens just on this one candle here. All right, but you can see key support around just below 290 to 3, goes up, breaks the anchor to that downtrend, which was at around 370 with this little push up, comes straight back down and tests that 310 zone and holds at a slightly higher level. Okay, so it's really good price action on a weekly basis. So to me, I'll just go back to that weekly. What we're looking at, if I just clear all this up, is another good example of what we're talking about. That's your high. We've had a good extension up, big pullback. We held this level. We extended back up to the highs, but this time around, rather than failing like we have previously off that level, we're consolidating around that level. And I think that 370 level is key. So we're consolidating. The longer we consolidate around that level, the more likelihood I think we're going to plow up and through, and we're going to start to attack these highs at 470 and above. Okay. So if we look at the daily chart, you can see key level at 370. We've had 2 legs down. We're straight back up again. So if we can chop around here, potentially hold 385, hold a level, then you can buy the break at say 395, $4 with a higher low on the daily as well. Okay, so what I'm talking about is, let's just get closer in there. We might have had a false start on this. I can't quite remember. I'll have to check it. So what I'm looking at, look at that. MACD starting to push back up. So to me, MACD going up, you want to be looking for a buying opportunity. And if price action is suggesting the same thing, then, holding 370, the fact that we've gone up a decent pullback. Okay, you got a lower high come to play, but we got back down to 370 and we've straight back up. So it's kind of doing that weekly price action of what we saw just before we had a good leg up. So the fact that we're consolidating through here at this higher level, we haven't quite played out for an entry for me. But if we can hold, even if we retest 380, potentially retest 380 and hold it and break to the upside, then I could probably box up my trade. You know, maybe somewhere in here. We'll just probably need a bit more price action, but actually I'll make it a different color. Does that make sense? So, and that's all in the context of what's happened on the weekly, the fact that we powered straight up here, we consolidated now on the weekly, consolidating sideways, so we're starting to hold. So if we get an entry off the daily, then you're looking to buy on the rise of the daily and the weekly. Okay, last one. Let's whip through this one. Oh, yep, testing 14.5. So it's actually, I'm on my weekly, I'm on a daily. So that to me is a no-go zone for a buy at the moment. If you're long, you've just got to manage your risk. That rejection candle was at Friday. I'd be a bit skeptical, a bit concerned. If we go back to the weekly, actually, was this the one that I was a feeling this is the one, SYA? I'm not sure if this is the one I was looking to buy and just chickened out for whatever reason. It's taken off. No, it wasn't. Something else. SFR. Anyway, so to me, if I want to be a buyer, it needs to come back down. I'm not buying up here because my risk is going to be at 7. So, 50, 60% risk, stop loss. Just keep, I would keep away from it. I'd be looking for something else. What I'd be looking for is at the pullback, potentially to 11. If it can hold 11, start to hold the MAs. I want to see a lot of these late traders flushed out. I want to see them, a bit of pain there. I want to see it hold. If I can get my inside high low, great. And I'll be buying off the high low. I know where to put my risk, and I'm buying back on the rise again. I'd never be buying there when it's starting to look like it's pulling back. Okay. So look, we'll just see how that all goes. What's on the 30-minute chart there? That 30-minute chart, if you're trading off that, trade it through 16 because it's holding high low still on the 30. It's just that rejection there. If it consolidates through here for a while, maybe that consolidation is going to lead to another leg up and really kick on the daily. But I just think that is well and truly away from the MAs. On the daily, the weekly is too. The weekly's getting a bit ahead of itself. So both those markets are extended. So if you're looking at it as extended, there's two things. If you're already long, you don't assume it's extended. Okay, but you got to take that on the flip side because it's all about risk. We're not about who's going to make the most money. We're about risk. For me, if you're long that, yeah, it's extended, but doesn't mean you close out because it could extend further. I mean, you could have extended when it got through, this red candle here. If I can get that back, that red candle there, you could have thought it's extended, so you close out and you find out it goes up to 16, 18. So it's a hell of a lot more. Okay, don't assume it's extended, but if you're going to be a buyer, do the flip, assume that it's extended. Assume that it's extended. Does that make sense? Because to me, if you're trying to manage your risk here for an entry, you've got to give it some room. It has to be all the way back down there. I'm not going to touch it. If you're long, you want to manage your risk after these. You can take it by a candle by candle basis because if it starts to pull back from there, you want to get stopped out as quick as possible, or you want to get out as quick as possible. So you don't just leave a lot of profits on the table. So I'd probably be managing mine, somewhere at 13.5. Potentially that would just be me, because for me, even if I'm going to do it off the daily chart, still my stop's going to be down here. And if I bought it at say 10 cents, the break at 10 cents, and my stop was below, say somewhere around 7, and we're now at 15 or 16, it hasn't really had a daily pullback like this to manage my risk from. So I wouldn't want to give up those gains. I'll probably be tightening it right up on a daily candle basis. Okay, I hope that all makes sense. Anyway, I better call it a day there, call it quits. We're still down 31 points. Let's just see what the Hang Seng's doing for reference. Probably nothing. Look, it's still sort of edging down. So, yeah, we'll see how that goes. Anyway, guys, thanks very much for joining me. We'll call it quits there. We'll see how we go for next week. It'll probably be another stream next week. But I'll try to get the alerts out nice and early so you know earlier rather than later. if there's going to be a stream. So hopefully around the 10:30 mark. Like I said, if you subscribe to YouTube, what you'll see is a notification come up there, or a heads up that we're going to be a stream on at 12:30. So thanks for joining me. If you do like what you hear, it'd be great if you can leave us a like on the YouTube channel and help us spread the word. Anyway, guys, enjoy the rest of your day, and I'll speak to you soon. Cheers, bye.